The reason I'm buying Bitcoin is because I think when we get through the all-time highs again and basically get rid of this 4-year cycle belief, now there's no imaginary place for people to ever again care about. And that's normally what happens in equity markets. And oh, by the way, 2017 was the end of the Donald Trump tax cuts. Well, we've had tariffs this year. We've had bad stuff happen this year. The equity market in 18 was bad. At one point, it was down 20% year to date in December. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Jordi Visser begins with humility, acknowledging that Bitcoin's current stagnation has surprised him. Despite expanding stablecoin markets, growing liquidity, and favorable macro conditions, Bitcoin remains roughly the same price it was last December. Meanwhile, gold has surged and the stock market has climbed, yet Bitcoin hasn't shown its usual beta, its typical correlation with risk assets. Visser attributes this partly to behavior within the crypto ecosystem itself. In his view, whales and OGs, early Bitcoin holders, were selling ahead of the anticipated 4-year halving cycle, a pattern that has shaped Bitcoin's history. But Visser warns, cycles work until they don't. Much like the seasonal patterns traders follow in traditional finance, once everyone expects an outcome, markets tend to pre-price it.
In my trying to understand, so when I have a view and it doesn't happen, and I thought we'd be much higher in Bitcoin right now, given all of the things that I expected in terms of the expansion of kind of the network effects this year, we've seen stablecoin market cap go higher and Bitcoin's not going higher. Bitcoin's like the same price it was in December. To give you an idea of how little it's gone, we've got gold going higher. So we've had this year, we've got money supply growing. You've got everything that you would expect happening, including the stock market going higher. And Bitcoin has just not had the normal beta that it's had. But the TradFi world always has this thing that it comes into beliefs, whether it's before presidential cycle. You'll see all these seasonals come out and people believe them. And seasonals work until they don't work. And if too many people are worried about the seasonals, what normally happens is they sell in front of it. And in September and early October, it was very clear to me and the people I was talking to in the space that there were a lot of whales/OGs, people that have made a lot of money that were selling, and it would kind of make sense in the 4-year cycle. But you said something very important. I just want to make sure people hear this. So my job in coming over from the traditional finance world as a macro person is to think about what I think the equity markets are going to do next year. So I believe that a lot of people think there's an AI bubble. There's not even a question. It's all day long. It's nonstop. I will continue to tell people, if you want to make the mistake of believing that AI is a bubble and then lose money, I don't give a crap. This year, for everyone who's bearish AI and thinks it's a bubble, the only thing that has saved them is one thing. I'm long gold. Give me gold. And that's been, if they're bearish AI, the thing that has saved them this year is to be long gold. So my gut tells me.
Crazy uncle market.
Yeah, exactly. So my gut tells me the pain trade for next year is gold doesn't work and the AI doesn't bubble. And then everyone has to go pick something to buy. I thought that was going to happen this year, not with the gold part, because I think gold long-term is going to go higher. But a China-US deal is critical to this whole situation. So what has led me to believe is that I do believe people were selling Bitcoin ahead of the 4-year cycle. Great. So then the way I deal with everything in the traditional finance world, just like it was before, any period that people believe, if you take out the highs before that, so now 126 has been set in stone. The reason I'm buying Bitcoin is because I think when we get through the all-time highs again and basically get rid of this 4-year cycle belief, now there's no imaginary place for people to ever again care about. And that's normally what happens in equity markets. And oh, by the way, 2017 was the end of the Donald Trump tax cuts. Well, we've had tariffs this year. We've had bad stuff happen this year. The equity market in 18 was bad. At one point, it was down 20% year to date in December. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading with traditional finance markets. So when you say that Bitcoin's 4-year cycle is going to play out next year, you're also embeddedly saying you don't believe in AI and you don't believe profit margins are coming and you don't believe the earnings are going to be higher and the S&P is going to go higher.
And you don't believe that the Fed's going to cut interest rates.
Yeah, exactly. The Fed's going to cut rates. And for all the dot-com bubble people out there, just remember, the Fed was raising rates into the dot-com bubble. For some reason, everyone highlights the fact that the Fed cut rates in 98, but they had to turn around and raise rates going into 2000. And we had the Y2K problem. But when you do central bank gold reserves as a percentage of reserves, it shows them going up, but it doesn't adjust them for the gold price. So their percentages have gone higher, but that's because when gold's up 60+% in a year, well, then no other currency reserves are moving that much. So they're a part of that, and a good portion of it has been the rise in gold, which means a lot of the buying that's happening in gold is not just central banks. Mm-hmm. It is absolutely positively wealthy people. And when Donald Trump put the tariffs in, I think, whether it was Russell Napier, whether it was all these people that did this whole capital flow argument, it made sense to me. It still does. And so that's why I don't think gold prices are going to go down. And there is a chance that if China and the US come to a deal, that gold prices go higher. But I think it's more likely that people are going to be very, very angry with gold by the time we get a year from now. And it's not that I think it's going to collapse. It's just that a lot of this is retail. A lot of this is momentum. So you can't have it both ways. You can't say there's a bubble in AI. Look at these charts going parabolic and go, but gold's not in a bubble. It's not the same. The reality is there's all this stuff going on. And when the Fed cuts rates, if people want to say, well, that's good for gold, I think they should go back and look at 2010 to 2016 because QE was happening. We had negative yields around the globe. And if you own gold from like 2010 to 2016, it was a horrible asset to own. Even though we had negative real rates, even though we had QE going on at every time. I think people need to focus on stocks from an earnings perspective, and I would say the non-Mag 7 stocks, because profit margins are going to explode next year, and the infrastructure names of AI are going to continue to explode. And I think they are just going to have to realize that the 4-year cycle also is the stock 4-year cycle.
Visser also warns that believing too strongly in Bitcoin's 4-year halving pattern implies disbelief in several other key macro trends: the AI boom, rising corporate earnings, and the potential for Fed rate cuts. If you're saying Bitcoin's next big move won't happen until next year, he argues, then you're also saying you don't believe in AI, you don't believe the S&P will go higher, and you don't believe the Fed will cut. And that, he implies, would be a major mistake. Visser doesn't dismiss gold entirely. He sees it as a long-term store of value, especially as global wealth diversifies away from the dollar. But he emphasizes that much of gold's recent surge comes from wealthy individuals and central banks reacting to uncertainty, not sustainable structural demand.
This year, aside from the things I mentioned, the stagflation, the inflation, there's also been the government's going to default. So JGB yields have been very correlated to gold over the last 3 years, and they've just gone higher. And JGB 30-year yields are actually doing something interesting right now. I'm a big fan of when you get news that's supposed to continue a trend, and it actually be news that stops a trend. Right now, JGB 30-year yields have gone back down. They gapped higher, and everything kind of went in when the election situation went in. But now all of a sudden, it's gone back down. I think this is a characteristic of the fears coming down. And I'll say this repeatedly. I'll tweet about it. I'll do everything. Can I say tweet? Is that still?
Yeah, you say whatever you want.
I can do whatever I want.
You called the market crash last Friday. This Friday is your show.
The China-US deal is far more important when it occurs. And I do believe it will occur, whether it's in November or whether it's in December. When it occurs, I think people have to sit back and take a look at what this agreement is going to mean. Because for this year, we've had a lot of problems. The Chinese export numbers came out over the weekend. They were up 8% year over year. The Chinese exports to the US were down 27% year over year. This has never happened before. So this has been a year where China has been kind of redirecting flows. They haven't bought any soybeans. So on the import side, they haven't done it. This is a trade negotiation, which has left a lot of people kind of worrying about what's actually happening. There's a lot of businesses in this country that get stuff from China, and they can't get them right now without tariffs. And so you've had this kind of disconnect. A deal happens. This is a major event for the world because it basically is going to mean a lot of things that I think people have been worried about. And gold is a worry thing. So where Bitcoin fits in is, if people aren't worrying as much, then Bitcoin goes with the other side, which is stocks. And that's why I'll say again, I believe stocks will be higher next year because the AI situation that people are going is not only accelerating, it's picking up a pace. And all of the tea leaves that I've read over the last 3 weeks in podcasts are people are not underestimating where we are in AI today. They're too focused on where it was in the past. Everything that you own that has become in some way digitized through electronics, which is everything that we're involved in, involves rare earth. But it's also an important part of military weapons, especially the modern day ones of drones and everything like that, of humanoids coming up. Like, it's critical. And the problem is the US outsourced this to China, as did the rest of the world. Now, the irony is the reason it was outsourced to China to mine for these is incredibly toxic. I mean, so where are you going to do this in the US? So whenever they go, well, we'll just do it in the US. Not an easy thing, especially when there's states and there's regulations. And
they won't even let us build a pipeline in the US.
So, I mean, rare earth is toxic. So China has been like, yeah, we'll do it. And so they've done it for the world. And
they have big deposits.
And there's quotes from as early as like 1980 from Deng Xiaoping that they were going to do this for exactly the reasons that have come up. We'll do it for this reason. So the Chinese always get talked about that they think and they make plans 30 years in advance. Well, this was a 30-year plan, knowing that it would be in this position. Now, they didn't know when someone like Donald Trump would come, when the US would be in a fiscal situation. Because remember, when you think of the tariffs and you think of the trade negotiations, you have to remember this goes beyond this. This is NATO. This is everything. The world is becoming more independent. It's breaking up. And it's becoming less centralized. And the US was the dominant feature. The dollar was the dominant feature. So rare earth is the bargaining power of China. And it's really important because there's no way for the US to get the supply. Even if they fast track it and they, JP Morgan said, we'll put up $1.5 trillion. The Pentagon said they're going to put $1 billion into this. Everything they've invested in companies. There's no way, listening to every single expert on rare earth, that the US can come up with enough of it in the next 3 years to deal with the problems they have. Is there enough for the next 6 months? Yeah, everyone has kind of front loaded. They bought things. They got what they needed from what I hear, but they will run out. So this becomes an issue. So this is China's bargaining power. Now, the good thing is if the US can get what it needs in 3 years, either internally or in other countries that are also worried about China, because it's a global issue what they did, Chinese lose their bargaining power fairly soon. So they're either using it for military reasons, like they're going to go invade Taiwan, which I think is highly unlikely, or this is part of the trade side and they're dealing with Donald Trump the way that you need to deal with them. As a reminder to everyone, because when you hear China, you think of country, and so people get the numbers. The US economy is close to 30 trillion. The Chinese economy is close to 20 trillion. The next economy below that, guys, we're dropping all the way down into the low single digits. So this is the pound for pound heavyweight fight. So he can't just walk in, and that's what China's saying. You can't just walk in and put tariffs on and go through it. So if you ask me what's likely to happen, there will be a deal. I've tried to figure out how it can end up that Donald Trump doesn't look bad and the Chinese are able to get what they want. I think almost no tariffs on China. Believe it or not, almost no tariffs, with a large investment into the US in something and purchases of soybeans and all of this stuff. So he can say he got investment dollars and this happened. And then everyone can go figure out how to deal with things on their own for the next 3 years as part of this divorce process of the coupling. The one thing I want to remind people that I fully believe, and it's part of my Bitcoin thesis, China has decided that they will back their yuan in gold. So they're looking at gold in yuan terms. So they have reserves. On the US side, we've chosen stablecoins. These are the two kind of new worlds that are going on. China's not too happy about the stablecoin thing. Europe's not too happy about the stablecoin thing. This just means that the capital flow argument that all of these great historians have said is taking shape with the old framework of gold and the new framework of stablecoins. And this is why Bitcoin is going to be a major, major part once the deal is done, because then we've set the table between gold and stablecoins.
Jordi Visser's analysis goes far beyond short-term price calls. It's a vision of a world in transition, from centralized to decentralized, from physical to digital, from fiat to programmable money. He reminds us that while markets may seem irrational in the short term, the deeper trends, technology adoption, global realignment, and capital migration, are unstoppable. Bitcoin stagnation today doesn't signal weakness. It signals a world in negotiation, waiting for clarity before the next great move. When the US-China deal is done, when investors realize AI isn't a bubble, and when gold loses its shine as a fear trade, Visser believes Bitcoin will emerge as the global balancing force between tradition and innovation, gold and stablecoins east and west.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.